Please confirm when you start recording, Tesla.
Okay, that is going on.
Recording started, madam.
Right. Good evening, everyone. Welcome you all to the guest lecture on value-added tax, organized as part of the taxation course. It is my pleasure to warmly welcome our guest lecturer for today's session, Mr. Nadika Suranjana. Mr. Suranjan is a distinguished member of the Institute of Chartered Accountants of Sri Lanka and an accomplished alumnus of the Department of Accounting, University of Sri Jayawardenepura. He currently serves as the tax partner at both Vijayaratna and Company and Nihal Hettiarachchi and Company, two well-established firms in the field of chartered accountancy in Sri Lanka. With over 14 years of extensive experience in the field of taxation, Mr. Suranjana brings deep expertise and real-world insights to the classroom. In addition to his professional engagements, he is also a passionate lecturer in taxation, sharing his knowledge at several reputed private education institutions as well. We are indeed privileged to have him with us today to share his valuable insights on VAT, a topic of great relevance and practical significance. Mr. Nadika Suranjana, over to you, sir.
Right. Thank you very much, Natasha Miss, for your kind introduction. Hope you all can see the slides and hear me properly.
Yes, sir.
Right. Let's quickly get into the presentation, as I always find it difficult to complete the presentation within the allocated time. As you all are aware, taxes are imposed by laws that are passed in the parliament. For different types of taxes, we have different types of acts. For income tax, we have the Inland Revenue Act. For SSCL, we have the SSCL Act. So like that, for value-added tax, we have the Value-Added Tax Act that was introduced in 2002 by the Act number 14. So basically, what we are going to do today is we are going to discuss about some key provisions that are there in the Value-Added Tax Act. So these are the areas we'll be focusing on today. First, we'll look at the imposition of VAT and some key interpretations, the concept of time of supply and registration requirements, and goods or services supplied in Sri Lanka, non-taxable supplies or exempt supplies, then VAT on importation of goods, then the calculation part to calculate the VAT payable. Then finally, we will focus on the compliance requirements that are in the value-added tax law. Right. First, we'll look at Section 2 of the law, which is the charging section that covers the scope of VAT. Basically, who are the persons who are covered within this scope, who are liable to pay taxes, and on what it is computed. And all that is covered within this scope, which is Section 2. Right. As per Section 2 of the law, VAT shall be charged in three circumstances. So we will look at one by one. VAT shall be charged under A, we have at the time of supply on every taxable supply of goods or services made in a taxable period by a registered person in the course of carrying on or carrying out a taxable activity in Sri Lanka. So during the next 1.5 hours time, we'll be discussing about the meaning of these keywords that I have highlighted here. So until that, you will not have a complete understanding of these provisions. But for now, let's try to get a basic understanding what this means and basic understanding about the scope of VAT. If we look at item A again, VAT shall be charged at the time of supply. That is basically about the time at which VAT is charged, VAT is payable. So in a particular transaction, certain activities happen differently. Now, as an example, sometimes you may collect advances without delivering goods or without issuing an invoice. Sometimes you may issue an invoice even without collecting cash or without delivering goods. So these activities happen differently in transactions. So at what point we should charge VAT is described under this time of supply concept. So we will discuss about that in detail in a while. On every taxable supply of goods or services, VAT is charged on every taxable supply of goods or services. Right. Now let's look at this slide. Now, supply of goods and services can be divided into two. As you can see, supply of goods and services, we have divided into two: taxable supply of goods and services and non-taxable supply of goods and services. That's also known as exempt supplies. So we have two supplies. Some are taxable, some are non-taxable. And this taxable supply of goods and services, we have again divided into two: supplies chargeable at the standard rate and supplies chargeable at the zero rate. Right? So the standard rate, zero rate, non-taxable supplies, we will discuss during the presentation. But for now, keep this classification in mind because most of the provisions of the VAT law can be understood easily if you keep this classification in your mind, right? So simple classification of good supply of goods and services. It is of two types, taxable and non-taxable. Taxable part is divided into two: standard rate supplies and zero rate supplies, right? If we go back to section 2, VAT is charged on what? Taxable supply of goods or services. So basically, exempt supplies or non-taxable supplies are not covered within the scope. Right? That is not charged on non-taxable supplies or exempt supplies. So what is covered here is only the taxable supply of goods or services. It could be supplies chargeable at standard rate, or it could be supplies chargeable at the zero rate. Right. Then made in a taxable period. So VAT is charged with respect to a particular specific period. It could be a 1 month period. It could be a 3 month period. So we will discuss the person's the situations where 1 month period is applicable and situations where 3 months period applicable by a registered person. So to charge VAT, you must first be a registered person because this is a special authority given to you by the government to collect taxes from the public on behalf of the government. The VAT you collect is not your money, it's not your property, right? It is a right given to you to collect taxes on behalf of the government. You are collecting taxes from your customers on behalf of the government. So it is not your money, you have to pay it back to the government, right? So if you are not a registered person, so you can't be monitored. So what you do and the transaction you enter into, they can't be monitored. So therefore, to charge VAT, you must be a registered person first of all, right? So only a registered person can charge VAT. In the course of carrying on or carrying out a taxable activity in Sri Lanka. very important word, taxable activity. So the Act has identified 5 activities as taxable activities. You have to do one of these activities to charge VAT, right? And also, most importantly, the taxable activity should be carried on or carried out in Sri Lanka, right? So based on this, there should be a taxable activity which is carried on or carried out in Sri Lanka. Number 2, even if there is a taxable activity, if you supply non-taxable goods or services, you are again not liable to charge VAT. And when you do this taxable activity, you have to supply taxable goods or services. And also, it should be done by a person who is registered for value-added tax. So that's a basic understanding that I can give for now. So we'll discuss about these highlighted words during the next 1.5 hours time. Right. Number 2, or B, VAT shall be charged on the importation of goods into Sri Lanka by any person. You don't need to be a registered person to import goods. So on the importation of goods also, VAT shall be charged. Now, if you look at A and B here, under B, we have importation of goods. Under A, we have supply of goods and services. So what is missing in B? Importation of services is not there. Importation of services is not there, right? But supply of services is covered within Section 2A. So we talk about export of services. If you give a particular service to a person outside Sri Lanka, so that is basically export of service. On the other hand, if you get a service from a person outside Sri Lanka, that's an import of service, right? But importation of services is not covered within this scope. So can you think of the implications of not having importation of services within this scope? Can you think about the implications? Right. Now, let's say you run a business and you want to outsource your accounting function. There are companies that provide these outsourcing services in Sri Lanka, and also you can outsource this to a person or company outside Sri Lanka also, right? So when you get this service from a person in Sri Lanka, he falls under Section 2A, therefore he is liable to charge VAT, right? But if you get the same service from a person outside Sri Lanka, that non-resident person is not covered within the scope. That is an importation of service. He may not have a branch office or permanent establishment in Sri Lanka. He can provide these services maybe online. So, but he is not liable to pay VAT in Sri Lanka because he is not covered within the scope, right? So what will happen? So the local service providers find it difficult to compete with foreign service providers, because if you are the end customer and if you can't claim input VAT, we'll discuss about that. Then if the same service, if you get it from a person in Sri Lanka, you will have to pay 18% more because he is liable to pay VAT and he will charge VAT from you. But if you get the same service from a person outside Sri Lanka, is not liable, so he'll not charge VAT from you. So the price you pay is lesser than the price you pay when you get the service from a person in Sri Lanka, right? So this act was introduced in 2002, as I told you, right? But the way the businesses are run and the transactions are happening have changed significantly over the period. Now we are in 2025, right? So, but these are original provisions, section 2A and B. They are original provisions that were introduced in 2002. These provisions of the Act should also be updated to deal with the improved, complicated transactions that are happening in the market. So now the government has taken this implication into consideration, and now they have incorporated item C also under section 2, right? So on the supply of services by a non-resident person through an electronic platform to a person in Sri Lanka with effect from 1st October 2025. This item C is not currently in effect, so that will be effective from 1st October 2025, where when a non-resident person provides services through electronic platform to a person in Sri Lanka, he will also fall within the scope of VAT, right? At the moment, they are not liable, but they will be liable after 1st October 2025. Right. I think you are clear about the scope of VAT. Now we will focus on the key words, meaning of keywords that are in section 2. Right. First, we'll take section 2(1)(a), which is the first part that we discussed. So as per that, the following conditions should prevail for chargeability of VAT under this provision. As I told you, the taxable activity should be carried on or carried out in Sri Lanka, and there should be a taxable supply of goods or services. The person should be a registered person, right? Now we look at the meaning of taxable activity. The Act has recognized 5 activities as taxable activities. As I told you, you have to do one of these activities in Sri Lanka to be liable for VAT. Right. Let's look at the activities coming under taxable activity. Any activity carried on as a business, trade, profession, or vocation, other than in the course of employment or every adventure or concern in the nature of a trade. Right. If you run a business, it could be a manufacturing, or you could be a service provider, or it may fall under trade. You can buy and sell, you can import and sell, or profession. If you are a professionally qualified person and if you practice, then you are also covered within this definition. Or vocation, where a professional qualification is not required and they work with their experience, like carpenters, like astrologers, where you don't need a special professional qualification to practice. They are covered. Other than in the course of employment. So employees, employment has been excluded from this taxable activity. Now, profession is there, but employment is not there. Now, let's say as a chartered accountant. If he practices as a chartered accountant, if he has audit firm, then he falls under profession. But if you are a chartered accountant and work as the finance director of a company, that is not your profession, that falls under employment. The contract you have with the company is employment. So employment is not covered, but profession is covered. Or every adventure or concern in the nature of a trade. the more, if you do a trade with profit motive, it is also covered within the meaning of taxable activity. Right. Number 2, or B, the provision of facilities to its members or others for a consideration and the payment of subscription in the case of a club, association, or organization. So there are various clubs and associations. They provide services to their members. Sometimes you have to pay a membership fee or annual subscription to maintain your membership. And you get services, various services from these clubs and associations. The Act says they are in a taxable activity and they are liable to pay tax on what they do. Item C, anything done in connection with the commencement or cessation of any activity or provision of facilities referred to in A or B. If you do anything, right, related to, let's say, opening up of a business or closing down of a business, that is also treated as a taxable activity. Item D, the hiring or leasing of any movable property or the renting or leasing of immovable property or the administration of any property. Hiring or leasing of any movable property, renting or leasing of immovable property, also administration of any property. Basically, your rental income, right? That is also treated as a taxable activity. If you rent out a property, you are doing a taxable activity. Last one, the exploitation of any intangible property, such as patents, copyrights, or other civil assets, where such asset is registered in Sri Lanka or the owner of such asset is domiciled in Sri Lanka. So using an intangible property where that asset is registered in Sri Lanka or the owner of that property is residing in Sri Lanka, is treated as a taxable activity. Now, as an example, if you write a book and give it to a publisher to publish and sell it, when the book is sold, you will get royalty income. So if you domicile here, the royalty income you get is covered within the meaning of taxable activity. But if you take Coca-Cola brand and if you pay royalty, that is not a registered asset here, and also the owners are not residing here, so that is not covered. To be liable, that particular intangible asset should be registered in Sri Lanka, or the owner of that intangible asset should reside in Sri Lanka. So these are the activities that are covered within the meaning of taxable activity. So one has to do one of these activities to be liable for value-added tax. Right. Now let's look at question number 1 to get an understanding about the meaning of taxable activity. A company which is engaged in the business of manufacture of articles has the following income disclosed for the quarter ended 31st March 2025. Turnover, sale of manufactured goods locally, 1,200 million. Export of manufactured goods, 500 million. And other income, they have repair services, 129 million. Scrap sales, 35 million. Rent income, 5 million. Dividend income, 4 million. And interest income on fixed deposit, 2.5 million. Identify whether the said items are chargeable with VAT and state the taxable activities into which the said item fall. All right. Now, sale of manufactured goods, also export of manufactured goods, fall within the meaning of their business, their manufacturing company. So, and also repair services scrap sales. They are also part of their business. So they are treated as taxable activities. If we go back to this, you can see under A, if you run a business, it's a taxable activity and that is liable. So sale of manufactured goods, export of manufactured goods, repair services, and scrap sales. They are part of a business, and also they are chargeable with VAT, and they fall under item A here, under business. Rent income. They have rented out a property, or it could be a mobile property, or it could be a mobile property. They have received rent income. For income tax purposes, you may treat this under business income or investment income. But for VAT purposes, that falls under item D. Hiring or leasing of any movable property, or renting or leasing of immovable property, right? So that is also chargeable with VAT and falls under item D of the definition for taxable activity. Dividend income and interest income. They are not part of your business and they don't fall into any of these activities, right? Therefore, dividend income and interest income on fixed deposits are not chargeable with VAT. Right. Now look at the meaning of taxable supply. VAT is charged on taxable supply of goods or services as per section 2A. What's the meaning of taxable supply? Taxable supply means any supply of goods or services made or deemed to be made in Sri Lanka, which is chargeable with tax under this act, and includes a supply charged at the 0% other than an exempt supply. So this is basically what we discuss here. Taxable supply of goods and services are supplies that are chargeable at the standard rate, including supplies chargeable at the 0 rate, but excluding non-taxable supplies, so exempt supplies. Right. Now look at the meaning of supply of goods and supply of services. All these are defined in the VAT law. We have to pay VAT on taxable supply of goods and services. So what is the meaning of supply of goods? Supply of goods means the passing of exclusive ownership of goods to another as the owner of such goods or under the authority of any written law, and includes the sale of goods by public auction, the transfer of goods under hire purchase agreement, sale of goods in satisfaction of a debt, and the transfer of goods from a taxable activity to a non-taxable activity. Right. Basically, if you are the owner of a particular good, and if you pass the ownership to another person, that is supply of goods. And it includes sale of goods by public auction. Sale of goods by public auction, where, as an example, now you take a loan, mortgaging a property, and you don't pay the loan, you default the loan, and the bank, to recover the loan, sells your property in a public auction. You are not selling the property, the bank is selling the property on behalf of you, right? So that is also, as per the definition for supply of goods, that falls under supply of goods. That is also liable, basically. Second one, transfer of goods under hire purchase agreement. That you can understand if you supply goods under hire purchase agreement. So that is also treated as supply of goods. Sale of goods in satisfaction of a debt. If you have a debt and if you transfer goods in satisfaction of that debt without paying that in cash for VAT purposes, that is treated as a supply of goods. And transfer of goods from a taxable activity to a non-taxable activity. Now we know the meaning of taxable activity. If you transfer goods from a taxable activity to a non-taxable activity. Now, as an example, you run a business and you want to donate some goods that are available for sale. So the business is your taxable activity. So you are transferring goods from your business, which is a taxable activity, to a non-taxable activity. Also, as an example, you take home the goods that are available for sale in the business. That is also transfer of goods from a taxable activity to a non-taxable activity. So for VAT purposes, they are treated as supply of goods. Right. So that is the meaning of supply of goods. Now we'll look at the meaning of supply of services. So this is a tricky definition. Now look at the way it has been defined. Supply of services means any supply which is not a supply of goods. Any supply which is not a supply of goods. Now, now you have only two supplies. Your supply of goods and your supply of services. Supply of goods is defined. It is defined, right? Supply of services is defined to include all the other supplies that are not treated as supply of goods. When you define something like this, what will happen? If a particular supply is not covered within the meaning of supply of goods, it should definitely fall within the meaning of supply of service. Right? So you can find different types of definitions in different acts. This is a tricky definition. Right? Any supply which is not supply of goods is supply of service, and includes any loss incurred in a taxable activity for which an indemnity is due. Any loss incurred in a taxable activity when you run a business due to various reasons, maybe due to fire or flood, if your goods are damaged, it is a loss that you incur in your taxable activity, right? And if the loss is indemnified, that is treated as a supply of service. Now let's say if your stocks are damaged and if you get it indemnified by the insurance company, the insurance claim you receive is covered within the meaning of supply of service. Clear? Right. If you incur loss in a taxable activity and if it is indemnified, so that is treated as a supply of service. So don't misunderstand this. It doesn't talk about the accounting loss that you incur in your business, right? That is not going to be indemnified, right? Right. So that's the meaning of supply of service. Right. Let's look at question number 2. Advise whether the following supplies fall within the meaning of taxable supplies for the purpose of chargeability of VAT. Supply of manufactured goods, which is chargeable at the standard rate of 18%. If you remember that classification, right? Supplies that are chargeable at the standard rate fall under taxable supplies. So the first one falls under taxable supplies. Export of manufactured goods, which is chargeable at 0%. That also falls under taxable supplies. Third one, supply of electricity, which is an exempt supply under the first schedule to the VAT Act. That's the other side of our classification, non-taxable or exempt supplies. Right. So that is not treated as a taxable supply. So the first two are taxable supplies and the third one is not a taxable supply. Question number 3. Advise whether the following transactions fall within the scope of VAT as a supply of goods or a supply of service for a VAT registered company. Sale of manufactured goods. The company, as the owner of the goods, transfers the ownership of the goods to the customer. So that's a supply of goods. Export of manufactured goods. No difference. You are transferring the ownership of the goods. So therefore, that is also a supply of goods. Disposal of machinery. You are not into sale of machinery. You are just a manufacturer, but you sell a machine. What will happen? As per the definition for supply of goods, it's a simple definition. If you are the owner and if you transfer the ownership to another person, so that is a supply of good. So the third one also supply of good. Donation of manufactured goods to the government. As I told you, if you are transferring goods from a taxable activity to a non-taxable activity, that is a supply of goods. Renting of part of business premises. Do you transfer the ownership of the business premises to the tenant? No. Then it is not a supply of goods. It is a supply of service. Insurance claim received in respect of damaged stocks manufactured by the company. As I told you, if you incur loss when you do a taxable activity, and if that loss is indemnified, that falls within the meaning of taxable, supply of service. So the last one is a supply of service. Right. If you can remember under section 2A, one of the highlighted words was a taxable period. Now we'll look at the meaning of taxable period. So VAT is charged with respect to a specific period, which is called a taxable period, right? Taxable period means we have two taxable periods. Under A, we have 1 month, a period of 1 month. Under B, we have a period of 3 months. So we have two taxable periods, 1 month taxable period and 3 months taxable period, right? A period of 1 month is applicable where any person is considered as an eligible exporter under this Act. If you are an eligible exporter as per the definition of the Act, then the applicable taxable period U is the 1 month taxable period. Right. Where any person supplies goods or services to any strategic development project during the project implementation period or any specified project identified by the minister. So these are specific projects that are carried on with the approval of, if it is a specified project with the approval of the minister in charge, or strategic development projects, there is a separate act. Strategic development projects should be carried out as under that act. So if you are a person who supplies goods or services to one of these projects, it could be a strategic development project, or it could be a specified project, then you also fall within the 1 month taxable period. Third one, where any person has commenced a business or started a project and undertakes to comply with the requirements of Section 22(7) of the Value Added Tax Act. So now it's like this. Now there are projects or businesses where to make a taxable supply, it takes a considerable time. Now, as an example, if it is a hotel project, there are a lot of activities you have to do before you supply foods and accommodation and before you sell your products or services, right? The construction, furnishing, designing, interior, lot of things you have to do, and also it takes considerable time. But under the Value Added Tax Act, you are given the permission to get the registration until you make taxable supplies. So if you that registration is a specific registration that is done under Section 22(7) of the VAT law. If you are a person registered under Section 22(7), then 1 month taxable period is applicable to you. Right? This is a specific approval given by the Inland Revenue Department, where the project takes a considerable time to make taxable supplies. So Section 22(7), where any person has proved that such person has commenced any business or any project in Sri Lanka and undertakes to make taxable supplies in respect of such business or project within a period of 30 months from commencement of such operation, then he may be registered. Then he may register such person subject to such conditions as may be specified by him. So this is also a special registration. Even before you make taxable supplies, you are entitled to get this registration. So there will be a lot of conditions and requirements to satisfy. But anyhow, if you get this registration under Section 22(7), the applicable taxable period to you is 1 month taxable period. Right. That's about the 1 month taxable period. Now let's look at the 3 months taxable period. So the persons who are falling within 1 month taxable period are given. So all the other persons fall within the 3 months taxable period. Right. All the other persons fall within the 3 months taxable period. And if you fall within 1 month and if you want to come under 3 months period, still that is possible, but subject to the approval of the Commissioner General. Right. A 3 months taxable period commencing respectively on the first day of January, the first day of April, first day of July, and the first day of October of each year in respect of a registered person other than A above, or who opts to submit quarterly returns on the approval of the Commissioner General. Right. Now let's look at the meaning of time of supply. one of the most important sections or the concepts in the VAT law that we can use legally to plan our taxes when there are changes in the VAT law. Right. So VAT shall be charged at the time of supply. The time of supply is the time at which VAT is chargeable. Right. This concept has been defined or explained in the law in relation to 4 circumstances. If you look at 3.1, we have time of supply in relation to supply of goods. When you supply goods, what's the time of supply? At what point you have to charge VAT? Under item 3.2, we have time of supply in relation to supply of services. 3.3, we have time of supply in relation to a supply made under an agreement providing for periodical payments. And 3.4, supply on payment basis as directed by the Commissioner General of Inland Revenue. So 3.3 and 3.4 are specific situations. We look at in general, 3.1 and 3.2 are generally applicable concepts. Right. When you supply goods, in a particular transaction, the Act has recognized 4 activities that can happen in a particular transaction. Right. So it can differently happen in different transactions. Right. Now let's look at the activities that I have given from A to D. The issue of an invoice by the supplier in respect of the goods. That's the time of issuing the invoice. A payment for the goods, including any advance payment received by the supplier. That's the time of collection of your payment. A payment for the goods is due to the supplier in respect of such supply. That is the due date of the invoice. The delivery of the goods have been effected. That's the date of delivery. Now, in a particular transaction, even without issuing an invoice, even without delivering goods, you may collect cash. You may get an advance payment. In the next transaction, you may issue the invoice without collecting money, without delivering goods. In the next transaction, you might deliver the goods without issuing an invoice or without collecting cash. Now, these things can happen differently in various transactions. Now we have to identify at what point that shall be charged. Is it the time of collection of money? Is it the time of issuing the invoice? Or the time of delivery of goods? Right. If it is supply of goods, the Act defines, Act says, the supply of goods shall be deemed to have taken place at the time of occurrence of any of the following, whichever occurs earlier. Out of these 4 activities, the activity that happens first decides the time of supply. The activity that happens first decides the time of supply. At that point, you have to charge VAT. Right. That's, if you look at the activities again, the issue of an invoice, basically the date of the invoice, payment for the goods, time of collection, payment for the goods is due date of the payment, delivery of the goods. Out of these 4, whatever the activity that happens first decides the time of supply. However, notwithstanding D above, that's the delivery of the goods, when invoice is issued in respect of goods delivered, within 10 days from the date of delivery of such goods, the time of supply of such goods shall be deemed to be the time at which the invoice was issued. Now it's earlier it said you have to take the activity that happens first. But there's an exception. If you deliver the goods and issue the invoice within 10 days, though you deliver the goods first, you have to take the date of the invoice as the time of supply. This is an exception. Yeah. Hope that is clear. Right. So how we can use this concept to plan our taxes or improve our sales? Now, as an example, before 31st December 2023, VAT was not there on solar panel supplies. When you buy a solar panel, VAT was not there. That is before 31st December 2023. Right? So government took a policy decision to charge VAT on solar panel as well from 1st January 2024. So before December 31st, solar panels were under exempt supplies or non-taxable supplies. So after 1st January, it became a supply that is chargeable at the standard rate, right? So the price you pay went up by 18% from 1st January 2024, right? So what did the solar companies do? They promoted their products. Hey, come and buy our products before 31st December and save 18%, right? It could be an advance payment you make. It could be an advance payment you make. Come and make an advance before 31st December and save 18% on that. Solar panel companies, the companies that were in this business, they promoted like that. So they got the benefit of, they use this time of supply concept to improve their sales, right? So if you pay an advance payment before 31st December, you don't have to pay VAT. Clear? So when there are changes in the law, especially rates and VAT rates, and also, as I told you, solar panel, exempt item becoming a liable item. So this can be used legally to plan and improve our businesses, right? Now let's look at the time of supply in relation to supply of services. So the same story, and also that 10 days rule also is also there. The supply of services shall be deemed to have taken place at the time of occurrence of any of the following, whichever occurs earlier. The service was performed, a payment is received for the services rendered or for future services. A payment is due for the services rendered or future services, or an invoice is issued in respect of the services rendered. Out of these four, the activity that happens first should be taken as the time of supply, and at that point, you have to charge or you have to pay VAT. However, notwithstanding A above, where an invoice is issued in respect of services supplied within 10 days from the date of performance of such service, the time of supply of such service shall be deemed to be the time at which the invoice was issued. After you perform the service, if you issue the invoice within 10 days, though you perform the service first, you have to take the date of the invoice as the time of supply. 3.3 and 3.4 are specific situations. let's look at 3.3 first, where we are going to discuss about time of supply in relation to a supply made under an agreement providing for periodical payment. Sometimes you may supply goods or services under an agreement. The agreement provides for periodical payments. That means you will be paying the price for the goods or services that are supplied under this agreement in installments in the future, right? In such a situation, how to take this, how to decide the time of supply. So that is discussed in two situations. If it is a hire purchase agreement, where goods are supplied under hire purchase agreement, the supply shall be deemed to have taken place at the time the agreement is entered into. Goods are deemed to be supplied, or the time of supply is the date of the agreement, if it is a hire purchase agreement. Under 3.3.2, we have an agreement other than a hire purchase agreement. If it is not a hire purchase agreement, the supply shall be deemed to have taken place when the payment is due or when the payment is received, whichever is earlier. When the payment is due or when the payment is received. So before the due date, if you receive the payment, the date of receipt should be taken as the time of supply. And if you receive the payment after the due date should be taken as the time of supply if the agreement is not a hire purchase agreement. Right. 3.4. Supply on payment basis as directed by the Commissioner General of Inland Revenue. Now, if you apply general rules with regard to supply of goods and supply of services, you are liable to pay VAT even before you collect VAT from your customers. Now, as an example, if you supply goods today, if you deliver the goods today and if you issue the invoice today, giving a 3 months credit period to your customer to make the payment, right? Can you wait till you get the money to make the payment to the government? No, you can't. As per the time of supply concept, today is the time of supply. You deliver the goods, you issue the invoice, right? So you can't wait till you collect money from your customers to pay your VAT. So if you apply this concept, there are businesses that are badly impacted by this concept. Now, as an example, if you take a construction company, generally their margins are low, though their amounts are considerably high, right? When they invoice, the invoice is subject to various alterations, and when they issue the invoice, they don't know how much they are going to get finally, right? That will be subject to various alterations by the engineers of the client, right? So in that case, if they ask them to pay VAT at the time of issuing the invoice, so they'll be in trouble because their invoice is subject to changes and there will be retentions. And to get the payment, it takes a considerable time. That's the nature of this industry. So when we ask them to pay VAT on, let's say, accrual basis, when you issue the invoice, pay VAT, so they will be in trouble, right? They won't be able to make manage their cash flows. So therefore, they can get cash basis approval from the Commissioner General to make VAT payments on cash basis, right? So that is a special authority, special approval given by the Commissioner General. So without that approval, nobody can use this cash basis concept to pay VAT. So for them, general provisions are applicable. But for these approved persons, if they are approved under, that is coming under section, that is given under section 23 of the VAT law, if they are approved to use this cash basis, they can wait till they collect cash to pay VAT, right? So if anybody gets this approval under section 23, the time of supply is the time of collection of cash from the customer. Where the Commissioner General directs any registered person to account for the tax on a payment basis under section 23, the time of supply of goods and services supplied by such person shall be the time at which the payment in respect of such supply is received. So if that approval is there, you can wait till you collect money to pay taxes to the government. So without the approval, you can't apply the cash basis. Right. Question number 4. Identify the time of supply in relation to the following circumstances. Goods were delivered on 20th December 2024 and the invoice was issued on 7th January 2025. What's the time of supply? Invoice has been issued not within 10 days. Therefore, the date of delivery, which is 20th December 2024, should be taken as the time of supply. Goods were delivered on 20th December 2024 and the invoice was issued on 27th December 2024. So within 10 days, the invoice has been issued. Therefore, you have to take the date of the invoice as the time of supply, not the date of delivery. So 27 December 2024 should be taken as the time of supply in the second situation. Invoice was issued on 27 December 2024 and the goods were delivered on 30th December 2024. So the goods have been delivered within 3 days after issuing the invoice. Can we take the delivery date as the time of supply? No, you can't. Right? So they have issued the invoice first. If you issue the invoice first, you have to take the date of the invoice as the time of supply. So in that case, 27 December 2024 is the time of supply. Right. Remember, we are still discussing about the highlighted words that were there in section 2. There we discussed that only a registered person is allowed to charge VAT. Who is a registered person? Any person registered by Commissioner General of Inland Revenue in the following manners shall be a registered person. The Commissioner General shall register a person for VAT where an application has been made by any person for registration under section 10. That is called mandatory registration. So registration requirements are given under section 10 that we will discuss in the next slide. And if you satisfy the conditions to be a registered person, you must go and register. You must go and register, right? So that is called mandatory registration. Or the Commissioner General, having regard to the nature of the activities, is of the opinion that a person is required to be registered, but has not made an application to that effect. As per section 10, as per the requirements given to be a registered person, you satisfy the requirements, but you don't go and make an application to be a registered person. So what will happen? The Commissioner General will take you and you will be registered forcefully, right? So that is not based on an application you make. The Inland Revenue will register you. That is called forced registration. whether it is mandatory registration or whether it is forced registration. After you get the registration, you are a registered person and you are liable and entitled to charge VAT. Now let's look at the registration requirements. Who are the persons who are liable to register? Requirements for the registration, they are given under section 10. 1. Every person who carries on or carries out a taxable activity in Sri Lanka shall register for VAT. Remember, taxable activity in Sri Lanka. There should be a taxable activity which is carried on or carried out by a person in Sri Lanka shall register for VAT if the total value of taxable supplies, not exempt supplies, total value of taxable supplies in a taxable period, could be a 1 month or 3 month period, has exceeded 15 million at the end of the taxable period, or total value of taxable supplies has exceeded 60 million in any 12 months period. Right. Or B, at any time, there are reasonable grounds to believe that the total value of taxable supply is likely to exceed 15 million in any taxable period or 60 million in any 12 months period. So if you look at A and B, A is basically based on your historical information. B, your future information. Now, after your taxable period, could be a 1 month or 3 months period. After your taxable period, you take your financial information and calculate the value of taxable supplies that you have made during that taxable period and see if you have exceeded 15 million in that particular taxable period. So if you have exceeded that, you must go and register. Or after 1 year period, after 12 months period, you look at whether you have exceeded 60 million. If you have exceeded that, you must go and register. If you are below that, you are not liable to register. So that is based on your historical information. B focuses on your future information. You have, now as an example, you have just started the company and you have no income that you have recorded yet. You have no operation at the moment. But suddenly you get a order, you get a confirmed order from one of your customers to supply goods, let's say for 100 billion during the next 1 year period. Right? So you have now reasonable grounds that you will exceed the threshold given during the next 12 months period. The annual threshold is 60 million. Now you have confirmed orders for 100 million to be supplied in the next 12 months period. So based on that also, you are liable to register. Right. Second one, this was introduced recently. Every person who imports or exports goods for commercial purposes shall be required to register. Every person who imports or exports goods for commercial purposes shall be required to be registered. Right? If you import goods into Sri Lanka for commercial purposes, not for your personal use, right? For commercial purposes, if you import, then you must go and register. Now, question comes whether the thresholds that we discuss under 1 are applicable to an importer who import goods into Sri Lanka for commercial purposes, right? No, those thresholds are not applicable. This is the only requirement if you import goods for commercial purposes. Whether you meet these thresholds or not, you must get the registration. On the other hand, if you export goods for commercial purposes, you must get the registration. This was introduced recently, about 2 months, about 2 months ago, if I'm not mistaken. Right. So those are the conditions to be, those are the conditions for VAT registration. If you satisfy these conditions, you must get the registration, right? You are liable to get the registration. But under the Act, we have an option called voluntary registration. Now, as an example, you may not fall within this threshold. You are below the threshold. And also you don't import or you don't export. So you are not liable to register. But you can make an application, and with the approval of the Commissioner General, you can also be registered. There, you are not liable to register, but you are entitled to register. If you want to pay tax, okay, you are allowed. Come and get the registration. Then after you get the registration, you can charge VAT from your customer. That is called voluntary registration. We discussed about mandatory registration, forced registration, and this is voluntary registration. Any person who does not satisfy the conditions, the above conditions, cannot register for VAT. However, Commissioner General of Inland Revenue may consider voluntary registration subject to conditions. Question number 5, determine whether the following persons are required to be registered under the VAT Act. An individual who provides consultancy services with an annual income of 55 million. The annual threshold is 60 million, so he is below the threshold, so he is not required to be registered under the VAT Act. A company which is engaged in the sale of locally purchased goods with an annual turnover of 75 million, annual threshold is 60 million. The company has exceeded the 60 million threshold, so the company is required to be registered. A company which is engaged in sale of manufactured goods with a turnover of 18 million for the quarter ended 31st March 2025. However, its estimated revenue from confirmed orders would not exceed 60 million by 31st December 2025. Now, after the first quarter, they exceeded the quarterly threshold, which is 15 million. They have exceeded that. Their turnover is 18 million for the first quarter. And it says that based on the estimated revenue from confirmed orders, the company's annual income will be less than 60 million by 31st December. Right? So the annual threshold will not be met by the end of the year. But the quarterly threshold, they have already met. Is this company liable to register? Yes. You don't have to satisfy both conditions. Quarterly, you don't have to meet quarterly threshold and also annual threshold to be liable to register. If you satisfy one of the two thresholds, you must register. So they have exceeded the quarterly threshold. Therefore, this company is required to be registered. Right. Now, as I told you, when we discussed about section 2, I told you that the taxable activity should be carried out in Sri Lanka. And goods and services should be supplied in Sri Lanka, right? So that is also explained in the law under section 9. Goods or services shall be deemed to be supplied in Sri Lanka, where the supplier supplier carries or no carries out a taxable activity in Sri Lanka. The taxable activity, the 5 activities that we discussed, should be carried or no carried out in Sri Lanka. It should be in Sri Lanka. If you run a business in Sri Lanka, okay. If you run a business outside Sri Lanka, then your taxable activity is not carried on here. Then that is outside the scope. And the goods are in Sri Lanka at the time of supply. When you supply the goods, if the goods are in Sri Lanka, so that is that could be treated as a supply made in Sri Lanka. Or if you are a service provider, the services are performed in Sri Lanka by the supplier or his agent. So your taxable activity should be here, and also the goods should be here when they are supplied, and the services should be performed here. Then only you satisfy the conditions under section 2. Question number 6. Advise whether company engaged in the business of providing management consultancy services is chargeable with VAT on the following transactions. Services rendered in Sri Lanka to clients in Sri Lanka. Services have been performed in Sri Lanka. So the first one is chargeable with VAT. Services rendered in Sri Lanka to clients outside Sri Lanka. You don't have to worry about the clients to whom the services are provided. If you perform the service here, that is within the meaning of a supply made in Sri Lanka. So the second one is also chargeable with VAT. Services rendered outside Sri Lanka to clients outside Sri Lanka. So there, the service has been rendered outside Sri Lanka. So that is not chargeable with VAT because the service has been performed outside Sri Lanka. Right. Right. Now let's look at the supplies which are not taxable or exempt supplies. Can you remember the classification of supply of goods and services? Taxable supply of goods and services, non-taxable supply of goods and services. So we are going to discuss about the non-taxable supply of goods and services, where VAT is not charged. A registered person is chargeable with VAT only in relation to taxable supplies. Exempt supplies given in section A listed in the first schedule to the Act are not subject to VAT. You can find the list of exempt items in the first schedule to the Act. Right. I have given all the exempt items, exempt goods and services in my presentation, but we will not have time to discuss one by one. But I will explain as to how you should read the exemption and how you should understand them. Right. First, this first schedule has been divided into 4 segments that I have given here from A to D. Supply or import. B, supply only. C, import only. D, import and supply. Right. If a particular exempt item, exempt good or exempt service is listed under supply or import category, that particular item is exempt when you import as well as when you supply. So the items that are listed under supply or import category are exempt when they are imported and also when they are supplied. If a particular item is listed under supply only, it is exempt when you supply it. If that particular item is imported, that is liable, because the exemption is applicable only when they are supplied. Third category, import. If a particular good is listed under import, that is exempt when they are imported. When they are supplied in Sri Lanka, they are liable. The exemption is applicable only on the importation. Fourth one, import and supply. First one, import or supply. Importation is covered, supply is also covered. Here, you have to import and sell. If a particular item is categorized under import and supply segment, it is imported when they imported and supplied. So that is how you should read the exemptions and understand. If a particular item is listed only under supply, you can't decide that it is exempt when they are imported also. Right. Now I have given all the exemptions, exempt supplies or non-taxable supplies separately under these 4 headings. So under import or supply category, we have wheat and wheat flour, infant milk powder, pharmaceutical products, drugs, Ayurvedic preparations, crude petroleum oil, we have loan lease. Then we have supply of category, education services, public passenger transport services, electricity services in relation to burials and cremations. So after paying all these taxes, we can close our eyes, because on cremations and all that, the VAT is not charged. So we don't have to pay VAT on VAT at the time of death. Right? So we have loan list under supply of category as well. Then we have import category and import and supply of category. So when you find a free time, have a look at the items that are not taxable for VAT purposes. Okay, now only we have completed section 2A. Up to now, we discussed about the various provisions that are related to section 2A. Now we look at section 2B, which shall be charged at the time of which shall be charged on import of goods by any person. So they are actually the organization or the person who is authorized to collect taxes when the goods are imported is the Director General of Customs, not the Commissioner General of Inland Revenue. So he is collecting taxes on behalf of the Commissioner General of Inland Revenue. So the Director General of Customs is the authorized person to charge or collect tax.
Service.
Well, sorry about the interruption. There was a power failure in our area. Natasha, Miss, am I audible?
Yes, sir.
Yes,
Right.
yes.
So we were discussing about VAT on importation of goods. Every person who is an importer of goods into Sri Lanka shall notify the Commissioner General not later than 14 days prior to the clearing of such goods that he has imported such goods and obtained from the Commissioner General an identification number for the clearing of such goods. So this is not applicable if you import goods for commercial purposes, then you are covered within the mandatory requirement to get a registration. So if you don't import for commercial purposes, you can get a temporary registration. This is called temporary registration. An temporary identification number just to clear the goods that you have imported, right? So this option was there earlier for commercial imports as well, but it has been removed recently. So if it is for commercial purposes, then you must get the permanent registration. So this is a temporary registration just to get an identification number to clear the goods. The said notification is not required in the following circumstances: importation under the personal baggage, and person who is already registered for VAT under Section 10. If a person is registered under Section 10, so he doesn't have to get another registration to import goods. He can use the same registration to import goods. Right. Now let's look at as to how the VAT payable is computed. The amount of VAT payable is computed as follows: output VAT, value of supply into tax rate. That's basically the tax you collect from your customers. From that, you can deduct allowable input VAT. So the balance is the VAT that you need to pay to the Inland Revenue. So this is why it is called value added tax, tax on value addition. Output minus input, basically. So the difference is the value addition that you have made. So on that, you have to pay tax. Then we will look at what this output VAT means and how it is computed, and what are the allowable input VAT. So output VAT is computed by applying the relevant VAT rates on the value of supply of goods or services. So two things. You have to first calculate the value of supply, then apply the relevant VAT rate. Now let's look at the meaning of value of supply and how it is computed. So for you, I have just taken the basic rule here in relation to specific situations. The act has recommended or act has recognized various calculations for value of supply. But what I have taken here is the generally applicable basic rule, how to calculate the value of supply. Right. If the supply is for a consideration in money, you supply goods or you supply services and you get a consideration for that. So what is the value of supply? Consideration minus VAT or open market value, whichever is higher. The consideration you get, from that you deduct VAT and you compare that amount with the open market value. So generally, these two amounts should be equal. you sell the product at the open market value and you add 18% on that. Then from the consideration you get, you remove 18% VAT. Then what is left is the market value, open market value. But there can be situations where transactions are happening between related parties or associated parties. It may not happen at the market value. As an example, if you sell something where the market value is 1,000 rupees, you sell it to somebody who is related to you for 500 rupees. Then you add 18% VAT on this 500 rupees and collect it from your relative. Then from the consideration you get, you remove 18% VAT. Then the amount is 500, where the market value is 1,000. So you have to pay VAT on the higher value. Then in our example, it's the market value. So when products and goods are sold at a price which is less than the market value, you have to be careful, because the value of supply is basically based on the concept of market value. Right. Supply is not for a consideration in money or partly in money. There also you have to take the market value. This is how the value of supply is ascertained. Right. Now we are talking about the output VAT. First you have to compute the value of supply, then you apply the relevant rate. So this is how the value of supply is computed. Now let's look at the tax rates that are applicable. We have two tax rates, zero rate and the standard rate. That's why we classified the taxable supply of goods and services into two, as supplies that are chargeable at the standard rate, supplies that are chargeable at the zero rate. So we have two tax rates, zero rate and the standard rate. Standard rate is changed by the government from time to time. So now the applicable standard rate is 18%. Before that we had 15%. Before that we had 12%, and even before that we had 8%. Currently the applicable standard rate is 18%. Right. Now let's look at the supplies that are chargeable at zero rate. So there are two tax rates are there. So let's identify the supply of goods and services that are chargeable at the zero rate. Then we know all the other supplies are chargeable at the standard rate. Zero rated supplies, they are given in section 7 of the VAT Act. So we have three subsections here, three sections here, A, B, and C. Under A, we have goods. Under B, we have some specific services. Under C, we have other services. So let's look at one by one. Goods shall be zero rated where the supplier has exported such goods for which payment is received in foreign currency through a bank in Sri Lanka within a period of 6 months from the end of the taxable period of which such exportation has taken place. So basically that is about export of goods. But there is a condition that the payment should be received in foreign currency through a bank in Sri Lanka. There will be a period also within a period of 6 months. This condition was introduced when the country was going through a bad period. Now, when our rupee was depreciating, it is profitable to keep export proceeds outside Sri Lanka. Right? When the country wanted foreign currencies, people didn't want to bring foreign currencies because the rupee was depreciating. So if they keep their export proceeds outside Sri Lanka, they can get the benefit of this exchange depreciating rupee. So people used to park their export proceeds outside Sri Lanka. So what did the government do? They introduced this condition. If you want to enjoy the benefit of 0%, bring the export proceeds within 6 months through the banking system, not through other unofficial systems, right? So if you satisfy this condition, then your supplies are taxed at the 0 rate. Next one, there we have some specific services. Services shall be 0 rated where the supply of such services are directly connected with any movable or immovable property outside Sri Lanka for payment in foreign currency within 6 months. The repair of any foreign ship, aircraft, or any merchant ship registered in Sri Lanka, or the refurbishment of marine cargo containers. Any goods imported into Sri Lanka for the purpose of re-export under the import trade for payment in foreign currency within 6 months. Copyright, patent, license, trademark, or similar intellectual property right to the extent that such right is for use outside Sri Lanka for payment in foreign currency within 6 months. International transportation, computer software development, client support services, and provision of services to overseas buyers by a government buying office. So here also we have this foreign currency remittance requirement within a period of 6 months to get the benefit of 0%. So in addition to these services, under C we have some conditions that need to be satisfied to get this 0%. Any other service other than B above, right? Any other service provided by any person in Sri Lanka. So the service should be provided in Sri Lanka to another person outside Sri Lanka. The recipient of the service should be a person outside Sri Lanka. To be consumed or utilized outside Sri Lanka, the service that we provide should be utilized outside Sri Lanka, shall be 0 rated, provided that payment for such service in full has been received in foreign currency from outside Sri Lanka through a bank in Sri Lanka within 6 months. So there are 3-4 conditions that you need to satisfy to get 0%. 0 rate if it is any other service, right? In the case of 0 rated supplies, no tax shall be charged in respect of such supply. So you take the value of supply and apply 0%. What is the output tax? 0. If you take a non-taxable supply or exempt supply, output VAT is 0. Basically, no tax. So what is the difference between 0 rated supplies and exempt supplies? So I'll come to that later. So no tax shall be charged in respect of such supply. The supply shall in all other respect be treated as a taxable supply. Though no tax is charged, it should still be treated as a taxable supply. Right. That is why we categorize 0 rated supplies under taxable supplies. Question number 7. Determine the applicable tax rate in respect of the following supplies. Export of goods. You can assume that the funds have been received within 6 months. So export of goods, the applicable VAT rate is 0%. Sale of goods to an exporter, indirect exporter. So you are not directly exporting, you are supplying goods to an exporter. Is it covered within section 7 that we discussed? No. So the applicable rate is the standard rate, which is 18. Consultancy services provided outside Sri Lanka for payment in Sri Lanka. What do you think? Consultancy services provided outside Sri Lanka for payment in Sri Lanka. If you can remember, I told you that services should be provided in Sri Lanka to be liable for VAT. If the services are provided outside Sri Lanka, they are outside the scope of VAT. Outside the scope of VAT. Consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in foreign currency, and the service is consumed outside Sri Lanka. All the conditions that we discuss under C are satisfied in this case. Service has been performed in Sri Lanka, the client outside Sri Lanka, payment has been received, and the service has been consumed outside Sri Lanka, so it is 0%. Consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in foreign currency, and the service is consumed in Sri Lanka. In this case, the service has been consumed in Sri Lanka. Therefore, they are not satisfied that condition. Therefore, the applicable rate is the standard rate, which is 18%. Consultancy services provided in Sri Lanka to a client outside Sri Lanka for payment in Sri Lankan rupees, and the service is consumed in Sri Lanka. They receive the payment in rupees, and also the service has been consumed in Sri Lanka. Two of the conditions have not been met. Therefore, the applicable rate is the standard rate, 18%. Right. Now we are going to discuss about a special adjustment that we do. As we discussed, when you apply the concept of time of supply, you can't wait till you collect taxes from your customers to pay taxes to the government. So if you issue an invoice and deliver the goods today, and if you give a credit period to your customer, 3 months credit period, then you will receive the proceeds in 3 months period. But after 3 months period, before that, so you apply the time of supply concept and you pay taxes today. Right. So after 3 months period, when you go to collect your taxes, the customer says, I'm bankrupt and I'm not in a position to pay. But you have already paid taxes on his supply. Now you are not going to get not only the taxes but also the price you sold the good for. So there should be an adjustment for bad debt that you incur in the business, because we pay taxes on not only on the cash basis. So this is how the bad debts adjustment should be done. In ascertaining the amount of tax payable and amount of tax on bad debt incurred in the taxable activity and which has become bad during such period shall be deducted. You are allowed to deduct bad debt that you have incurred. If any amount is subsequently received, now after 3 months, after 6 months, if the same customer comes and pays you, now, okay, I have recovered and I'm in a position to pay you, then the amount received shall be treated as a taxable supply during the taxable period in which it was received and shall be liable to tax. If you recover the return of debt later, then you will have to include that and pay taxes on that. Question number 8, based on the following information, compute the output VAT for the taxable period ended 31st December 2024. Sale of goods locally, 52.8 million. Export of goods, 15.3 million. Bad debts, local sales, we have 1.5. Export sales, 1 million. Recovery of bad debts of local sales, 1.8 million. So we need to compute the output tax. So we have local sales 52.8. Bad debts, local sales, you can deduct, you can remove 1.5 million. And recovery of bad debt should be added. So you add 1.8 million. Then the value of supply is 53.1 million. On that, you apply the standard rate, 18%. 53.1 million into 18%. 9,558,000. Right. Then you take export of goods, 15.3 million. From that, you deduct bad debts, 1 million. The value of liable supply is 14.3 million. And you apply 0% on that. And the output tax is 0. So basically, this is how bad debts adjustments are made. Right. Now we have covered the output VAT part. Now we will look at the input tax that you can deduct from your output tax. So what is input tax is defined. So basically you have two types of input taxes. When you purchase goods and services from a person who is registered for VAT, he will also charge VAT from you. The VAT you pay to another registered person forms part of your input VAT. In addition to that, if you directly import goods, then as you know, VAT is charged on importation as well. The VAT you pay on importation also forms part of your input VAT. So we have two types of input tax. Input tax in relation to a registered person means the tax charged by another registered person, B, the tax paid by him on the importation, right? This input tax, whether it is on a local purchase, whether it is on importation, you are allowed to deduct it from your output VAT. But if you can remember, if you are allowed to apply the cash basis method to compute your taxes, where what happens is you can wait till you collect money to pay your output VAT. On the other hand, you can claim your input taxes only after you make the payment. If output VAT is computed based on cash basis, input VAT is should also be computed accordingly, right? Otherwise, whether you pay your input tax or not, you are entitled to deduct it from your output VAT. A registered person is entitled at the end of each such period to credit for so much of its input tax as is allowable, and then to deduct such amount from any output tax that is due from him. However, any person adopting a payment basis of accounting is entitled to claim credit on so much of his input tax as is allowable only in respect of a supply for which the payment of tax has been made by such person. Right. Now, when we are going to deduct our input taxes from our output tax, we have certain restrictions, right? In certain circumstances, we can't deduct the input tax that we pay. So we are now going to talk about the restrictions of input tax claim. Any input tax attributable to the supply of goods or services received shall not be deducted in respect of the following. First one, input tax in respect of motor vehicles. Input tax in respect of motor vehicles, you can't deduct However, other than these 5 situations, with regard to these 5 situations, you can claim your input tax. Generally, input tax you can't claim on motor vehicles. Input tax in respect of motor vehicles other than, now we are talking about the input tax that is disallowed. So input tax in respect of motor vehicles you can't claim, but under these circumstances you can claim. If it is a motorcycle, you can claim. If it is a bicycle, you can claim. If it is a motor coach provided by an employer for the transportation of its employees, right, you can claim. If it is a motor vehicle used for excursion tours or for the transportation of tourists or transportation of goods or hiring cars, then you can claim. Motor vehicle forming part of any stock in trade of any taxable activity. If you are into buying and selling of motor vehicles and import and selling of motor vehicles, then you can claim. So other than, you can't claim input VAT on motor vehicles against your output VAT. Second restriction, input tax not connected with the taxable activity. If the supply of goods or services received is not connected with the taxable activity or not included in the value of taxable supply, the input VAT is not allowed to be deducted. Remember our classification: taxable supply of goods and services, non-taxable supply of goods and services. If your input VAT relates to your exempt supply or non-taxable supply, that input tax is not claimable. You can't deduct it from your output tax. But if it relates to your taxable supplies, then you can deduct it. This is the difference between the zero-rated supplies and exempt supplies. In relation to exempt supplies, you can't deduct your input VAT, but you can deduct your input tax with regard to zero-rated supplies. So as far as output tax is computed, there is no difference between zero-rated and exempt supplies. Where is the difference? When you are going to claim input tax, right? Third one, input tax not supported by a tax invoice or customs goods declaration. So we will discuss about this tax invoice in a while. When you purchase locally goods or services, the input tax should be supported by a document called a tax invoice. If you have a tax invoice only, you can deduct it. If you don't have a tax invoice, then you can't deduct it. If you import, the supporting document is the customs goods declaration. So if that document is there only, you can deduct your input tax, otherwise you can't. So if the supply of goods or services received is not supported by a valid tax invoice or a customs goods declaration, then you can't claim input tax. Fourth restriction, input tax not claimed within the prescribed period. There is a time period within which you should claim your input tax. Now we talked about 2 documents, tax invoice and the CUSDEC. If it is a tax invoice, you have 12 months period to deduct it from your output VAT. So after that, you can't deduct it. If it is a CUSDEC, you have 24 months from the date of the CUSDEC to deduct it from your output VAT. So no input tax can be claimed if in the case of a tax invoice not deducted, from the output tax for any taxable period ending on or before the expiry of 12 months from the date of such tax invoice. You only 12 months. In the case of a customs goods declaration, not deducted from the output tax for any taxable period ending on or before the expiry of 24 months from the date of such custom period. You have to have the document, and the document should be claimed within the specified period. Right. The next restriction, this is relating to zero rated supplies. If the payment in respect of supply of goods or services referred to in subsection 1 of section 7, that's about zero rated supplies that we discussed, is not received in foreign currency through a bank in Sri Lanka within a period of 6 months from the end of the taxable period of which such exportation has taken place, or the supply of such services provided, as the case may be. I told you under export zero rated supplies, there was a requirement to bring the foreign currencies through the banking system within 6 months. If you don't bring, what will happen? Then that is not a zero rated supply. Then that is a supply that is liable at the standard rate. So you have to apply 18% on the value of supply and calculate the output tax. In addition to that, when you are going to claim your input VAT, if you don't bring the proceeds in, you can't claim your input VAT against that. Basically, you have to pay 18% on the gross amount of the export proceeds if you don't bring the funds in. You're penalized in both ways. Right. Let's look at question number 9 and see the concept we discussed, how they are applied with regard to a particular question. The following information is extracted from the books of accounts of PQR Limited engaged in the business of manufacture of goods for the taxable period ended 31st March 2025. All transactions given below are exclusive of VAT where applicable. So without VAT, they have given the amounts. Output, supplies to VAT registered persons, 3.5 million. Supplies to non-VAT registered person, 2.5 million. Input, import of raw materials, 3 million. Local purchase of raw materials from VAT registered persons, 1.5 million. Purchase of raw materials not supported with tax invoices, 1 million. Salaries and wages, 1.8 million. You need to calculate the VAT payable for the taxable period ended 31st March 2025. I have given you the answer also. First, we have supplies to VAT registered persons. The value of supply is 3.5 million. It's a general supply, not a zero rated supply. So you apply the standard rate of 18%. So the output VAT is 630,000. Then supplies to non-VAT registered person. You don't need to worry about the registration of your customer, whether he's liable or not. If you are liable, you have to collect VAT from your customer. Value of supply is 2.5 million. You apply 18% rate. Output VAT is 450,000. So total value of supply is 6 million. Output VAT 1,080,000. So that's your output tax, and we are going to deduct input tax. Import of raw materials. Value of supply is 3 million, and you apply 18%, and input tax is 540,000. Local purchase of raw materials from VAT registered persons, 1.5 million. So when they purchase materials from VAT registered person, they give you a document called tax invoice. So based on that, you can claim it. 1.5 million into 18%, 270,000. Purchase of raw materials not supported with tax invoices. You're paid VAT, but you don't have a tax invoice to prove this. So 1 million at 18%, 180,000. Salaries and wages. You don't pay VAT on salaries and wages because the employment has been excluded. from taxable activity, so that VAT is not applicable on salaries and wages. So the total input that you have paid during this quarter is 990,000. But we had a purchase of raw materials where tax invoices are not there. So therefore, if you don't have this document, you can't claim input tax. So that I have deducted from the total input VAT, 108,000, because not allowed due to non-availability of tax invoices. So the claimable or allowable input tax is 810,000. So that you deduct from your output VAT, which is 1,080,000, and you arrive at the VAT payable amount of 270,000. Right. In the above question 9, in addition to the output mentioned, if the company has exported goods amounting to 750,000 and supplied exempt goods amounting to 1 million, compute the VAT payable for the taxable period ended 31st March 2025. Now, earlier we had only supplies, standard rate supplies. Now we have a zero rated supply and also an exempt supply. So how we are going to incorporate zero rated and exempt supplies into our answer. Now let's calculate output VAT first. Supplies liable at standard rate that we already calculated, 6 million, 18%, 1,080,000. Then we have exports. Supplies liable at zero rate. Value of supply is 750,000. We apply 0% and no tax. Then I have taken a subtotal of these two to get the value of taxable supplies. 6,750,000. Output VAT is still 1,080,000. Then we have exempt supplies 1 million. No tax rate is applicable and there is no output VAT on exempt supply. Then we get the value of total supplies, 7,750,000. Still the output VAT is 1,080,000. Now, when we are going to deduct input tax against our output tax, we had a restriction because the input tax attributable to non-taxable supplies or exempt supplies cannot be deducted. We had a restriction. So here I have given you a simple formula to compute the input VAT attributable to taxable supplies. What is not deductible is the input tax attributable to exempt supplies. So what we are going to deduct here is the input tax attributable to liable supplies. So the total input tax claimable, allowable total input VAT was 810,000. And we divide it by the value of total supplies, 7,750,000, and you multiply it by the value of taxable supplies. So that is the input VAT attributable to taxable supplies. So that's the amount that is claimable. So in this case, the VAT payable is 374,516. That is how you should do the sum when there are zero rated and exempt supplies are involved. Right. Now the final part of our presentation, some compliance requirements in the VAT law. First, we'll look at this important document, a tax invoice. A registered person who makes a taxable supply shall issue a tax invoice within 28 days after the time of such supply. If he has made a written request within 14 days from the time of supply stating that he is a registered person or deemed to be a registered person. Now, if a client comes for the first time to buy something, he has to inform you that he is a registered person and he needs a tax invoice. So he has 14 days time from the time of supply to make that request, and you have another 14 days period to give a tax invoice to that person. But after that person makes the first request, he doesn't have to make a request thereafter. Then you know that he's a registered person, and when you supply goods or services to him, you must issue a tax invoice to him. However, where request has been made by a person after the receipt of the first supply, such person is not required to make any further request in respect of subsequent supplies. Right. Composition of a tax invoice. They are given in the law. If any of these items or requirements are not there in an invoice, it's not a tax invoice. And if it is not a tax invoice, you can't deduct your input tax. So you need to make sure that all these components are there in a tax invoice. Name, address, and registration number of the supplier. Your name, your address, and also your registration number. The name, address of the person to whom the supply was made. Details about your customer. The date on which the invoice was issued and its serial number. There should be a serial order and also the date of the invoice. The date of supply and description of the goods or service. Supply date and what you supply. Description of the goods or service. Quantity or volume of the supply. The value of supply, tax charge, and the consideration for the supply. In a tax invoice, you have to show the value of supply, tax, and the total consideration separately. You just can't put the total amount and say this is a tax invoice. In a tax invoice, these figures should be mentioned separately. Most importantly, the words tax invoice, the word should be there in the invoice and it's for a tax invoice. Right. All these items should be there in a tax invoice. Otherwise, it's not a tax invoice. And if it is not a tax invoice, you can't deduct input tax. Right. Tax invoice on imports, as we discussed, when you import goods into Sri Lanka, the custom goods declaration or any other document authenticated by the Director General of Customs shall be treated as a tax invoice. Retaining copies of tax invoices. Generally, the original of the tax invoice, you should give it to the customer and you should keep a copy for 5 years period after the expiry of the taxable period in which that invoice was issued. You have to keep a copy of the invoice for 5 years period with you. The original of the tax invoice shall be issued to the person to whom the supply was made, and the duplicate of such invoice shall be retained by the person who makes such supply for a period of 5 years after the expiry of the taxable period in which such invoice was issued. Issue of copies of invoices. Generally, you can't issue 2 invoices for the same supply, but if the customer if the customer has misplaced the original tax invoice, then he won't be able to claim input tax against his output tax. And if he comes and asks for a copy of the tax invoice, you can issue a copy, but in the copy, in that document, you have to mark it as a copy only. So it is not lawful to issue more than 1 tax invoice for each supply. If a registered person claims to have lost the original tax invoice, the person who makes the supply may issue to such registered person a copy, clearly marked copy only. Then issue of non-tax invoices. Now, after you become a registered person, you don't have to issue tax invoices to all the customers. Tax invoices are required only when your customers are also registered person to claim the input tax. When you supply to non-registered persons, you don't have to issue a tax invoice to them. Then you can issue a general commercial invoice, including the VAT component, showing the total consideration. Clear? In a tax invoice, you have to show the value of supply, tax, and the total consideration separately. That is applicable when you supply to registered person. When you supply to non-registered person, you don't have to give them a tax invoice. You can issue a commercial invoice with the total consideration, including VAT. Where the recipient of a supply is not a registered person, such supplier shall issue an invoice, giving the total consideration of such supply, including the tax charge. An invoice issued under this subsection shall not be considered as a tax invoice. That particular commercial invoice is not treated as a tax invoice. Right. Filing of VAT returns. So after your applicable taxable period, 1 month period or 3 months period, you have to submit your VAT computation as to how you compute how you computed your output VAT, how you computed your input tax with all the schedules to the Inland Revenue Department. So there's a due date for that. Every registered person is required to furnish the VAT return not later than 1 month after the expiry of each taxable period. So if the applicable taxable period to you is the 1 month taxable period, then you have to submit monthly returns. Within 1 month, you have to submit the return to the Inland Revenue. If the quarterly taxable periods are applicable to you, then you have to submit the tax returns quarterly to the Inland Revenue. Payment of tax. Monthly taxable periods on or before the 20th day of the following month, day of the month following the end of the taxable period. So after there the 1 month period, where the 1 month period is applicable, you have to make monthly payments. You have 20 days to make the payment to the Inland Revenue after the taxable period. If there are quarterly taxable period, still you need to make monthly payments on or before the 20th of the following month. And when you submit the tax return after the quarter end, the final payment for the quarter, you can adjust and pay. But for that also, you have 20 days time after the end of the taxable period. So on a monthly basis, on the 20th of the second month, 20th of the third month of the quarter, and the balance by the 20th of the month immediately after the quarter. Okay. Basically, that's the end of my presentation. We had a power disruption also, but anyway, I was able to manage this time within the allocated time. So please free if you have any question on the areas that we discussed.
So there's a question in the chat box. I will send it to you, sir. She has sent it directly to me. So you are on mute mode.
sorry. If a company is not registered for VAT, okay, but sells VAT liable product, okay, as that company cannot collect from customers and remit to IRD, okay, is legal that company add VAT amount into gross sales value. No, if the company is not registered, they can't charge VAT from its customers. That's number one. You have to be a registered person, first of all, to charge VAT. So the company cannot charge VAT, and if they collect, it is not legal. Number two, that company shall pay VAT and income tax. The company shall pay VAT and income tax. Company is not a registered person, so the company is not liable to pay VAT. I think the student is referring to input tax, I suppose. Yes, of course, when he purchases, he has to pay input tax on his purchases when he buys from registered person and also when he imports. So this input tax he pays on local purchases and also on importation forms part of his cost. If he is not a registered person, if he is a registered person only, he can deduct it from his output tax. If he is not a registered person, he cannot collect output tax, and the input tax he pays is part and parcel of the cost he pays. If he pays input tax on revenue expenditure, that can be charged against the profit and loss account. And if that particular expenditure is allowable under the Inland Revenue Act, that can be claimed. And if that input tax is attributable to a capital asset, depreciable asset, that should be capitalized and he is entitled to claim depreciation on that. Natasha Miss, did I answer that question? Was that the answer that he expected?
Yes, the student says it's okay, sir.
Right, thank you.
And also, Nadika sir, the section number 1 may be now section number 1 of this particular section is legal that the company had VAT. I mean, now when the goods are sold in the market, all these goods are liable for VAT. Other than those things are not listed in that exempt schedule, is it?
Yes, if a particular item is listed under exempt schedule only, they have specified only the exempt items. So all the other items that are not there are liable.
So any company could sell liable products if
Any
they are not
company could sell
registered.
liable products, but if they are below the threshold, unless you go for voluntary registration and get the registration, you are not liable to register. And if you are not a registered person, you can't charge VAT. What will happen is, but when you buy the same product, the liable product, in the supply chain, there should be a person who is registered. So the VAT is embedded in the price that is available in the market. When you buy, if you are not a registered person, that will be a part and parcel of your cost. So when you decide the price of your product, this is different. The cost structure of an unregistered person is different to a registered person. Is it clear, Uday sir?
Yes, that is very clear.
Right. We have another question. In the case of insurance claim, an insurance claim received from a damage in the office premises, also VAT chargeable or not, sir? Right. So what did I say under supply of service? If you incur loss in a taxable activity and if that loss is indemnified, that is treated as a supply of service. So if now let me put that in a different way. It is a supply of service, so therefore it is liable. That's my answer. Let me explain that in a different way. If the insurance claimed is received in respect of damage to a exempt item, right? There is a product which is exempt, which is listed under exemption. So it is an exempt item. Earlier, I used to take motor car as an example, but now I can't take that example because even motor cars are now VATable. Earlier, we had an exemption on motor cars. Now, let's forget about that exemption and think that motor cars are exempt. Motor cars are liable for this example. Now, let's say if motor cars are exempt, right? If it is completely damaged, and if you receive insurance claim, it is a supply of service, but it is not taxable because since it is fully damaged, the insurance claim can be treated as the sale proceed of the motor vehicle. It's like a deemed sale. But if there is a small repair damage and you need to repair it, and for that you receive insurance claim, then that is a taxable. That should be treated as a taxable supply of service. But motor cars are now VATable. To answer your question, yes, you have to pay VAT on that, and you have to give a tax invoice to the insurance company. You have to give a tax invoice to the insurance company. Otherwise, if you don't give, they will just give the claim only, and you have to pay VAT on that claim. Yes, any other questions?
Natasha, it seems that there are no other questions.
Oh.
If they put any other questions to over to you or me, we'll contact Nadik sir and we try to do something in relation to those questions.
Sure, sir.
Okay.
Okay. So, on behalf of the Department of Accounting, I would like to extend our heartfelt thanks to Mr. Nadika Suranjana for taking time out of his very busy schedule to join us today. Thank you very much, sir. We are especially grateful for your continued support and commitment as you have consistently joined with us for these sessions over the years. I can remember last year also you joined and did the same session for our students. So your willingness to share your expertise and real-world insights on VAT has greatly enhanced the learning experience for our students. And thank you once again, sir, for your valuable contribution and for being a constant pillar of support to our taxation course. Thank you very much, sir.
You're most welcome, and also I must also thank the department, Udesha, Natasha Mix, and the team at the department for continuously inviting me to do this presentation. I'm really happy and glad to share my experiences and my knowledge with this young undergraduates. So thank you for giving me this opportunity. And if there are any questions on the areas we discussed, please feel free to share it with me, and I will definitely respond. So with that, shall we conclude the session?
Yes, sir. Uday, sir, we can conclude the session. No, sir.
Yes, Natasha, please.
Okay,
Okay.
so thank you, students, for joining and asking questions. If you have more questions, you can direct to this or me, then we can solve your questions. Thank you, Nadika sir, again, and good night. Thank you very much.
Thank you all. Good night.
Thank you, Nadik sir.